whole life insurance is not the investment you make. It simply makes the investment you make better, period. That's what it does. And so I always talk about the fact that we need to simplify financial confusion, and we need to simplify and like quiet down all the noise of all the moving parts, because I think when people talk about whole life insurance as an investment and all the things that it can do for you, a lot of it is true, but there's just so much hype and all these things going on. People are talking too many numbers in all these different directions. What it really boils down to is efficiency and leverage. That's what whole life insurance will do for you in its most simplistic terms. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and for this video, I'm going to be talking to you about how to get a 40+% rate of return by utilizing your whole life insurance policy. I know that sounds too good to be true, but I promise you I'm going to show you how to do it. And I also know that it sounds probably pretty incongruent with how I normally talk about life insurance and whole life insurance, because I always say whole life insurance is not an investment, right? It is a storage vehicle to be compared to a savings account, right? And when you compare it apples to apples to a savings account, the guarantees, the growth, the ancillary benefits, it's like a savings account on steroids, and it becomes a no-brainer. And when you understand that you need it for emergency, for opportunity, for your rainy day fund, those things, you understand that having a properly designed whole life insurance policy is one of the biggest no-brainers, and it is absolutely key to have it as the core, the foundation of your financial life. Now, getting into this, what I do want to say is full transparency. You're not going to get a 40% return inside of your whole life policy. But what I'm going to show you is how to utilize a financial strategy that requires you to have whole life insurance to be able to leverage it with, guess what, real estate. And that's why I wrote this book, Cashflow Hacking, Investing for Cash Flow, Leveraging Real Estate to Reach Financial Freedom Faster. Listen, 90% of millionaires have real estate in their portfolio for a reason. The tax benefits, the cash flow, the leveraging, the collateralization, all these different things that go along with it. I'm not going to get into it completely right now. I'll get into it a little bit later. But the bottom line is this. This is how I think of whole life insurance. So for all of my people that were born in the 80s, or maybe you're older and you watched a lot of NFL and NASCAR, because I remember I would always watch NFL on Sundays, and I remember going to my buddy Jason's house, and his dad was like this huge NASCAR fan, and there was always this car. It was a BASF car. Do you remember? Like maybe you remember that car back in the 90s. I don't remember who drove it. Was never really a big fan, but they also had commercials that came on that, the BASF commercials. And if you don't remember them, this is what they did. They said, and there was always this tagline, and it's still etched in my brain. It's funny how commercials work like that. At BASF, we don't make the products you buy, we make the products you buy better.
At BASF, we don't make the plane, we make it lighter. We don't make the lotion, we make it smoother. We don't make the dress, we make it brighter. We don't make the carpet, we make it tougher. At BASF, we don't make a lot of the products you buy, we make a lot of the products you buy better. BASF, the spirit of innovation.
And so, whole life insurance is the BASF of the financial world, right? Whole life insurance is not the investment you make. It simply makes the investment you make better, period. That's what it does. And so I always talk about the fact that we need to simplify financial confusion, and we need to simplify and like quiet down all the noise of all the moving parts, because I think when people talk about whole life insurance as an investment and all the things that it can do for you, a lot of it is true, but there's just so much hype and all these things going on. People are talking too many numbers in all these different directions. What it really boils down to is efficiency and leverage. That's what whole life insurance will do for you in its most simplistic terms. So what does that mean for you? That means it's going to help you create a positive arbitrage, meaning any asset you buy. Think about real estate. You buy real estate, it's going to do well for you no matter what. But would you like to increase the performance of your real estate by 20 to 30%? My guess is the answer is yes to that. Whole life insurance can help you accomplish that. So what you do is with whole life insurance, it's going to put you in a position so you have that, to be able to take advantage of arbitrage, I should say, is that you have, let's say your cost to acquire an asset is 3%. If you know you can earn 5% on the asset that you're utilizing to pay 3% on, there's a 2-point spread there. There's a 2% spread. Now that 2% spread may not seem like a lot initially, but when you start compiling a lot of houses, tons of equity, a lot of cash flow, right? That's what this is all about. And so what I want to do is I actually want to share my computer screen, and I'm going to share with you the calculator that I had. Because when you go, if you want to go and get this book, like I said, you can go to Amazon, $19.99. You can go to cashflowhackingbook.com. There's a link in the description below. You can go down there, and when you go to cashflowhackingbook.com, you're going to pay $8.95 for shipping and handling. I cover the rest, right? So it'll save you $12 or so on the book, right? And as you go through that, we actually have a free 5-day cash flow hacking challenge that will help you figure out how to implement and execute this in your life. And I'm going to educate you for free, an hour a day. And I'm doing it every single week. So you can go check it out. You can go sign up. It's all ready to go for you starting every Monday for the next 6-7 weeks. So I'm telling you, get ready. It's awesome. Now, what I'm going to do now is we have a calculator that I'm going to share with you, and you're going to get access to in the challenge. And what I'm going to do right now is I'm going to show you that calculator to show you how you can get a 40+% rate of return leveraging whole life insurance to buy your real estate. So here you go. This is the Freedom calculator that we have for the cash flow hacking challenge. Now, what is this doing? This is going to show us how long utilizing whole life insurance as a savings vehicle combined by utilizing the liquid cash value in the policy to buy turnkey real estate properties. And so what I'm doing here is I'm saying, let's start off with $150,000 and somebody that's got $150,000 that they can put into their first investment. This can come from other investments that you liquidate to transition into real estate. It can come from money in a savings account. It can come from a home equity line of credit for yourself. It can come from wherever you want. I'm not here to tell you what you should or shouldn't do, and always, talk to your financial advisor or whoever your financial professional is before doing that and making a decision. Make sure it works for you and understand the risks. But the bottom line is I'm just going to start with this number. I'm assuming it's a 40-year-old, and the goal is they want to be retired by the time they're 55. Let's just say they come to me. Maybe you're 30, you want to be retired by the time you're 40 or 45. Maybe you're 50 and you're like so far behind, you got 150 grand, and you're like, wow, I want to retire by the time I'm 65, and I don't think I'm going to be able to make it, right? So what I'm going to do, this is a retirement rescue plan or a retirement acceleration plan, one way or the other. I think you're going to see what I'm talking about. Now, what I have here is your average rate of return on your investments, 8%. Mortgage rate, since it's an investment property, I'm going to bump up a little higher than the typical market rates right now at the time I'm filming this at 4.5%. And let's just say your freedom number is $12,000 per month, meaning that's what it costs for you to live every single month, right? So what I'm going to do here, I don't know why those just got deleted. Okay, so we're going to go $24,000 for annual savings. That's monthly of $2,000 a month. Right? So here you go. Well, I'm going to hit the calculate the freedom number. And what it's going to do is it's going to pop out a set of assumptions for me. So what it does here is you can see the freedom number is $144,000 a year. The rental properties that you're buying, we're assuming it's a $250,000 rental property. And by the way, that's based off an assumption based on a program that, my wife and I have been involved with the guy who runs it for 8 years now. And it's an amazing, amazing program. So I'm just going based on the numbers in the markets that I know we can accomplish predictably. And if you don't know him, his name is Mike Wolf. He's been on the channel a bunch of times. You can look at his videos inside of our channel if you want to watch. I'll link one above. If you want to watch one of the education videos, you can watch that with him. But you see here the annual property appreciation is 5%. That's pretty conservative in the right markets. Like last year, Phoenix alone did 21%. And so, it's not going to do 5% every year. It might do 2% and then 10% or whatever. But the bottom line is 5% average. Mortgage rate, 4.5%. Rental increase, 5%. So think about this. When you have rental properties, this is why rental properties are so powerful. Because when you have a rental property, you earn money on it and you grow your wealth in 3 ways. You have the appreciation of the properties. You have the increase in the rent and the cash flow, right? The spread, the cash flow you're earning on the property. Plus, you have the mortgage pay down, right? You have the mortgage pay down as the people are making the payment to you. You have the free and clear cash flow above the mortgage requirement that you have due. And then you have the amount that they're paying your mortgage down. So as it's appreciating, they're also paying the mortgage down. So you're getting bigger returns there. And you also have tax benefits. So that's kind of like the four-pronged approach, right? It's pretty awesome. Now, their current investment in their current strategy, let's say, is 8%. So what does this say? This summary is saying that to reach your freedom number, utilizing a whole life loan without it being paid off, meaning you're still going to have a little liability at that point in time. You have 9 years and 2 months. 9 years and 2 months right there. You're going to have that loan. You're going to have enough free and clear cash flow to reach your freedom number, $12,527. It's going to take. You're going to have 25 rental properties if you follow this plan accordingly, right? Now, once again, this isn't guaranteed, but I'm telling you, we're operating this calculator with an under-promise, over-deliver mindset. It's a very, very conservative set of assumptions in the markets that we deal with, right? So here's the deal. It's at year 9 and 2 months, you still have a whole life policy loan out there. So what this is saying is that after starting year 9 and 3 months, you're going to take this $12,527 and you're just going to utilize it every month to pay back either your whole life policy loan or your line of credit that you have your policy being collateralized to leverage. And I've got a lot of videos on that. I'm not going to get into the details on that, but you're going to use this $12,527 to pay back the loans. And so what does this mean? At year 11 and 8 months right here, you're going to have your whole life insurance loan or your line of credit completely paid off. And at that point in time, you're going to have $17,633 of free and clear cash flow. You're going to own over $8 million of real estate, rental properties. You're going to have over $3,197 of equity, meaning you could sell your real estate platform and have almost $3.2 million. Now, I wouldn't do that because you're talking, look at this, you got $17,000 a month of cash flow, right? Like, why would you ever, that's like 200 grand a year in cash flow. Why would you ever stop that? I don't know anybody that would want to stop that in that instance or scenario. But if you had to, this is the equity that you have. And look at this, your annual cash on cash rate of return, the amount of money that you actually put in from your own pocket is 54.26%. That's 46.26% better than your current return. Why is that? How is that? It's because you're only taking the money that you're putting in and saving, i.e. the $24,000 a year and that initial $150,000 deposit. The rest of the money being utilized to accomplish all this is the growth of the property, the mortgage pay down by the tenant, and the increase in the cash flow from the properties that your assets are creating for themselves inside of that. That is not money you're putting into them. And then when you tag on the tax benefits, which really aren't even included here, it becomes that much more powerful. So as you can see, this is like the biggest no-brainer in the world. And this is why I wrote this book, because I think every single person in the world needs to know about this strategy. I'm a big believer. The financial system is broken. 95% of the people in North America right now are not able to maintain their standard of living or are off track or off pace to be able to maintain their standard of living when they retire, right? To me, 95% is a big, big number. That is a systemic problem. That tells me the system is broken. And I was told a long time ago, if you want to be successful, find people that have what you want, emulate what they do until you have the life that you want. And that's what really inspired me to write this book, is by working with people, by learning from people, by getting mentored by people, and taking the knowledge that I know from the space that I'm amazing at and combining the two, writing this simple book. I'm telling you, when I say simple, not to dumb down my own piece of work here, but it literally is under 100 pages and you could get through this in an afternoon. I want to make it as simple as possible for you to understand and break it down. And then if you have any questions, you can reach out. We're happy to help you. I'm happy to connect you on the real estate side, on the whole life insurance side, because here's the deal with the whole life insurance that I want to tell you. It's not just any whole life insurance policy. And out of the hundreds of thousands of life insurance agents in this country that have the ability to sell whole life insurance, a very, very, very minusculely small percentage of agents actually know how to design these policies properly to fit in, to be able to leverage it for real estate in the way that I talk about in this book. So if you have any questions at all, comment in the comment section below. Make sure if you want to have a conversation with anybody, you can go down. There's a link in the description below. Set up a call. We'll have one of our endorsed people that are certified, that have been trained and understand all this stuff. They'll reach out to you. And once again, go get your free copy of Cashflow Hacking. Go to Cashflow Hacking book. The link is in the description below. You can get your free copy, or you can go to Amazon and you can pay $20 for it. That's up to you. No harm, no foul for me either way. But I know this book will serve you. I know it will help you accomplish what you want to accomplish. And if you haven't already, make sure you smash that subscribe button, hit the bell. That way you get notified every time I launch a new video. Until next video, have a blessed, inspirational day, and we'll talk to you soon.